Hey guys, welcome back. In today's video, we are talking about the AMC squeeze zone, the fake broker data, the short squeeze margin calls, and many more in this video. Firstly, we're taking a look at this. Even if AMC recently dropped a few cents at the beginning of each trading day, I won't sell a share to catch those tiny percentages. There is a reason why. So when we take a look at AMC, we're seeing how it has been for the past couple of days. And now after we saw, almost a 20% increase, we're seeing this pullback happen. And the reason why we're not trying to play these, short-term plays is because you have to understand where AMC is at, understanding the fact we are in a short squeeze zone, especially with everything that's ongoing right now. Because of what we talked about with the margin calls coming in from the silver side, we're talking about the Japanese yen carry trades, we're talking about the illiquidity problems that these institutions and short sellers are having. You have to realize with everything that's ongoing right now, AMC is in a short squeeze zone. And it could just be a matter of seconds for when AMC starts squeezing, when these short sellers obviously can't hold anymore. The reason why I also say this is because constantly we're faced with suppression. For AMC today, as we opened up within an hour of trading day, AMC was immediately met with 84.57% in off-exchange volume. You can see most of the shares volume were actually routed into the dark pool, not having an effect on the actual price. Now, it's no surprise that this is happening because when you take a look at AMC, the day we were up 13%, whilst we still had a massive amount of dark pool, around 67 to close to 70%, we were still able to beat these short sellers. The same applied for the Monday. And so as they saw that AMC was up 20%, they started panicking and they were doubling down on the suppression and manipulation on AMC's price. And typically, when we talk about the dark pool, when we compare the dark pool at the start of the day versus the dark pool at the end of the day, what you will see is that as we go through the day, the dark pool percentage actually goes down. So typically when we see it start with 84, we might see it then go down to 80, 75, and then settling perhaps at 71 or 72. However, today for AMC, you can see as we started, we were at 84.57. And as we progressed into the day, as we saw the volume really kicking in, especially with what's happening with silver right now, the dark pool volume was actually increasing as opposed to what happens normally of decreasing. And so we see it go from 84.57% to 87.03%. And now we were seeing 12 million shares of volume being rotated into the dark pool. And you can see for the NYSE as well, it was also a decrease, 4.89 to 4.06. Now, in yesterday's video, we've already talked about this. Citadel themselves have talked about how internalization should be something that should be banned, is something that will harm the price of a stock. And that was before they obviously realized that they could use it to exploit it and manipulate the price to make themselves money. But it doesn't change away from the fact that they stated that internalization harms the price of a stock. And when you look at AMC, what we are looking at is the internalization of all of these trades. The very fact we are seeing 12.4 million volume being hidden away, the fact we're looking at 87% for AMC, it really says a lot, especially with the current market environment. Like we've said, Japanese yen carry trades, the silver margin calls, the illiquidity problems, all of these things right now, and the fact that AMC was having a few green days that were pushing these short sellers to a scary place, the fact that we were constantly in a short squeeze zone, these are the reasons for why the short sellers are doing what they are doing. And if you want to take a look at why we've said that the short interest data is obviously something that we should take with a massive grain of salt, that we should treat it as the very minimum, the only thing it tells us is what these short sellers are doing, not to the extent of every 100% detail that is happening, but rather are they still increasing onto their billions of synthetics that they have created. You can see FINRA collects unverified self-reported data from the very firms that fund it. And essentially, you have to realize is that SEC admits that it doesn't check blue sheet submissions for errors and accepts whatever data broker dealers give them, no matter how accurate or not. So we're talking about the SEC, we're talking about FINRA and how they collect these data unverified. So we don't know whether or not they are accurate. We don't know whether or not these firms are telling the truth. And the very fact we have seen so many fines being given out about how this institution was reporting the wrong trade, about how this institution was manipulating the trades, manipulating the market. When you ask me, do I believe that these unverified self-reported data, are they true? Are they 100% true? No. That is my honest answer. I do not believe that the very firms who have been fined, who have been caught, who have been exposed for manipulating the market are then suddenly finding within themselves on these self-reported data to give true 100% data. Because at the end of the day, every time they've been fined was because they got caught and not because they confessed themselves. And so this is what we talked about with how the short interest data, you need to take with a massive grain of salt. When we talk about all of these data on AMC, the ones that we have done extensive research through all of these platforms, for all of these brokers, through leaks and other places, these data showing billions of synthetics are something that we can understand, are something that we can believe. But when a short seller is saying that they are only shorting 5% of AMC, that the short interest is only 10%, that they are not even shorting AMC now, they have covered, I personally don't believe it because of the fact we know about the history, we know about how they hide all of these data and how they lie about all of these data. Now, we talked about the silver price. Firstly, you have to understand for AMC is that we still own around 27 million of Highcroft, obviously with the warrants as well. A lot of people are still talking about the fact that AMC sold their shares of HYMC, which we've said is completely true. Had they not sold it, they would have made more profit. But you have to realize AMC still has a stake within HYMC that they are still able to make money. So the people who are saying that AMC completely lost out, it's only on a portion of the shares that they've sold, but they still have the ability to profit off of HYMC, and we're practically in a risk-free investment. So if for those of you who are complaining potentially about AMC not managed their money well, but they're also complaining how AMC took profits early, you know, you're contradicting yourselves. But you have to realize is that AMC has money and AMC has this investment still, just not as much as before. Now, we take a look about this. Firstly, we talked about how AMC is constantly in a squeeze zone. And we talked about the pressure we've applied towards the short sellers, along with the rest of the other things that are going on. GME is also applying this pressure. Now, we talked about this package briefly in the past before, but something about this is showing how this is looking similar to the Tesla setup. And this is talking about how Ryan Cohen would be locked in to pump a GME market cap to 100 billion because of the compensation package. And it was basically a comparison to Tesla. But I think it's very important because it applies the same to AMC, which is when the CEO has a massive incentive, when their whole benefit is tied up with the increase of the price of their own stock, I do believe that there will be more things that would be done. I do believe that the likelihood of then this stock going to that market cap becomes infinitely higher because of this big incentive. But previously, I believed in it as well. But now it's showing that this is something that will happen sooner than later as opposed to before. You can also see one of the biggest things that could potentially happen, especially with this incentive, is the fact that we saw a previous tweet where Ryan Cohen talked about how China is a sleeping giant, let her sleep, for when she wakes, she'll move the world. Now, we've known about Ryan Cohen's investment in ticker symbol Baba, so Alibaba, and talking about how this could be the pivot and we could be looking at a partnership / merger for Alibaba and GME, especially the fact they want to pivot into e-commerce. And this is something that could obviously be very, very big. And like we've said, we are just looking out for these things. Now, talking about silver, firstly, why is this important? Because there are apes invested into HYMC. AMC still has investments in HYMC. So these things benefit us. Then short sellers of AMC are shorting silver as well. So if they're affected by silver, they will be affected with their AMC positions as well. what we're looking at is how the Shanghai silver prices soared to a record $105, and now it's trading at a $13 premium to spot silver prices in the US, and with the fact that physical silver shortage in China is intensifying. Now, this has been a very good lead indicator throughout the past few days. When we knew that the silver market in China was up, we were seeing the US market follow along with it as well. So the very fact we are seeing it hitting 104 in the Chinese market would tell you a lot about what's going on right now, especially as of this recording, the current silver prices is $93. And you have to realize the squeezing silver will affect other highly shorted equities like GameStop, like AMC. Because we have to take a look at this before what we talked about, the kind reminder about silver, UBS, and GME, where UBS is both a market maker and a clearing member, and they also carry the toxic swaps of AMC and GME. So when we talk about silver prices going up, we talk about who it affects. Some people are firms like UBS. So if UBS are then put into, and bear in mind that they are already in a illiquidity problem, but if they are then put into even more stress, think about what they will do. Think about the swaps that they have to cover. Think about the positions that they have to protect themselves. And this is what we talked about with how silver prices going up means so many different things for us. And then you can even see here about how immediate silver accepted physical deliveries continue to pile up. And the increase in this is just showing the demand. It's showing the price is very likely to go even higher. And so this is another indicator of why we're going to be looking at silver prices increasing. And then you can see is that what we're seeing is how the US Mint just told customers silver is breaking out by stopping sales, because this happens when physical silver is getting tight, like we talked about with physical deliveries, like we talked about with the Chinese market, how paper prices no longer match real demand, suppliers can't hedge fast enough, inventories are being drained. So this is why we're focusing on silver prices right now. I hope you guys understand in terms of the effects it has with us, the relationship it has with us, not only with AMC, but apes and these short sellers as well. And then you have to realize more debt issuance and subsequent monetization by global central banks led by Fed needed to reimburse tariffs charged plus to cover the US budget shortfall from future missing tariffs will highly likely be bullish for precious metals due to monetary inflation. So even more reasons for why the silver market is going to go up. And once again, I've already talked to you about why we need to care about silver. And so here you can see all of the reasons for why I believe silver prices will go up. And then even more, the Japanese market. The global collapse is starting in Japan. We're seeing the Japanese yen go up. At one point, we saw it hit 159.6 in terms of the USD against Japanese yen. And we talked about how at 160, government intervention starts happening. That's when the market collapse will start happening. And this is what we have to look out for. Now, as always, none of this is ever financial advice, so do take what I say with salt. Make sure you do your own due diligence and research, and I'll catch you guys next time.